Welcome back to Unday Radar Talks. Palantir Technologies. Palantir released its latest quarterly earnings on Monday. The company's revenue beat analysts' expectations, but the company expects revenue to fall by $649 million to $653 million in the current quarter. That was below analysts' expectations of $653 million. Additionally, the company forecast full-year revenue in a range of $2.68 billion to $2.69, below the $2.71 billion Wall Street analysts expected. Palantir shares plunged nearly 15% on Tuesday. As of 12 p.m., the stock had traded 107 million shares, with a turnover rate of 5.62%, compared with 175 million shares traded the previous day, with a turnover rate of 9.19%. Such high trading volume and turnover rate in 2 days made it difficult for investors to anchor a strong support position, and technology stocks did not perform well on Tuesday. We saw on the 10-minute chart that the stock was trading on heavy volume throughout the day on Monday, and they knew the stock price would plummet the next day. The stock is trading on heavy volume again after Tuesday's open, and volume should be higher today than it was the day before. Palantir stock saw a net capital inflow of $200 million on Monday, but this was a reverse net outflow. As of 12:20 p.m. on Tuesday, the stock had a net inflow of $3 million. However, the direction of today's funds has not been clear yet, and we need to pay attention to today's closing price and tomorrow's price trend. Let's take a look at Palantir's position cost distribution as of May 7th. The current position profit rate is 23.6%, and the selling pressure is weak, while the stock's position profit rate was 90% the previous day. A large number of positions will be concentrated at the $21.60 position, and positions below this price are decreasing. So even if the stock price drops again, it should not fall too much. Technology stocks are being divided by the impact of quarterly financial reports. Whether Palantir stock can rebound quickly will also be affected by the overall market sentiment. The lowest point of Palantir's stock price on Tuesday is about to reach the position where big capital raised the stock price on April 25th. So the position of $21 should be a strong support position for the stock. Disney's streaming business may not yet be profitable, but the entertainment giant is getting there. The company reported a fiscal second quarter operating loss of $18 million for its direct-to-consumer segment, which includes Disney+, Hulu, and ESPN+. That was down from the $216 million the company lost last quarter and a year-over-year loss of $659 million. After the opening of trading on Tuesday, Disney's stock price plummeted by nearly 10%. Its price has reached the lower position where the stock price rose by 11% after the release of the last quarter's financial report. What is confusing is that this is a gap, so how to determine the support position? We see on the 10-minute chart that the stock saw heavy trading on Tuesday morning. The stock price began to rebound after hitting a price of $104.21, but the rebound was not strong. As of 1:35 p.m. on Tuesday, 40 million shares had been traded, with a turnover rate of 2.23%, compared with 16 million shares traded the previous day, with a turnover rate of 0.89%. We see that the stock has experienced net capital outflows in the last 6 trading days. On May 6th, there was a net outflow of $17 million. As of 1:35 p.m. on the 7th, the capital withdrawn from the market had reached $100 million. Although the market has not closed yet and the final amount of capital outflows is currently uncertain, the current large capital exit may mean that the stock price will continue to fall. Let's take a look at the stock's position cost distribution as of May 7th. The current profit rate of the stock position is 41%, and the selling pressure is average, while the profit rate of the previous day was 85%. The sudden drop in stock prices causes most positions to be concentrated above and below the current price, and then these two parts of positions will move to the middle gap position. But we see that despite the significant increase in volume today, there is not much concentrated positioning at the current price level. so the stock price may continue to test lower. 22 analysts have rated Disney stock in the past 3 months. Buy rating accounts for 100%. Analysts have given the average price target for the next 12 months at $130.91, with the highest estimate being $145 and the lowest estimate being $32.13. Forecast for Disney stock price. I think the stock will continue to move lower until the gap is covered. In other words, below $99 is a strong support level, so I don't think it is a good time to buy now. Alibaba. Alibaba announced its latest quarterly financial report before the market opened on May 14th. However, the company's stock fell 3% on Tuesday. Why? The company's stock rose 6% on May 2nd, with a trading volume of 36 million shares and a turnover rate of 1.84%. The stock price reached $82 on May 6th and then fell quickly. The current price has fallen below the closing price on May 2nd, which does not look good. The trading volume of the stock as of 3 p.m. on Tuesday has exceeded that of Monday. Does the heavy volume decline mean that the stock price will fall further? We can see from the 10-minute chart that the stock traded heavily throughout the day on May 2nd, and then the stock price rose slightly. On Tuesday, the stock price once again fell back to the position where large capital raised it on May 2nd, which was $78. However, the stock's performance on Tuesday afternoon remained sluggish and seemed to lack the strength to rebound. We saw that the stock rose 6% on May 2nd, with a net capital inflow of $66 million and a net inflow of $27 million the next day. As of 3 p.m. on May 7th, the stock had a net capital inflow of $32 million, but the stock price fell sharply, so these net inflows are likely to be a reverse outflow that exited the market. Let's take a look at the position cost distribution of the stock as of May 7th. The current position profit rate of the stock is 94%, and the selling pressure is strong. There is a large concentration of positions at $73.80. The current price is about 7% away from $73.80, so the stock still has the potential to fall further. In the past 3 months, 11 analysts have rated Alibaba stock, with buy ratings accounting for 81.82% and hold ratings accounting for 18.18%. Analysts have given the average price target for the next 12 months at $104.81, with the highest estimate of $131.90 and the lowest estimate of $80. Price prediction for Alibaba. I think the stock will continue to fall. The profit-taking at the bottom will still sell the stock in the next trading day, and the stock price will find a strong support position below the current price. I think it should be $76. That's it. This is my analysis. If you have different ideas, please leave a message below. Thank you for watching. If you like my video, please give a thumbs up and click the subscribe button. See you in the next video.